Under certain circumstances, non-current assets, whether depreciable or not, must be tested for impairment annually. This may result in the recording of an impairment loss in addition to any depreciation. This test is carried out annually for most non-depreciable assets. For depreciable assets, it is carried out when there are indications of impairment of the related assets. These indications may be internal, such as significant changes in the way the asset is used, or external, for example, the decline in the market value of the asset due to technological change. When there is no indication of loss of values, there is no impairment test to do, and hence no impairments to be recorded for depreciation assets. The impairment test involves comparing the book values of the asset with its recoverable amount. What is the recoverable amount? It is the higher amount of either the asset's estimated net sales price or the values in use based on estimated cash flows generated by the assets. If the book value is higher than the recoverable amount, the asset should be impaired by the difference between the two values. Now it is your turn to think. Consider the case of land acquired for $200,000 in year N minus 5, which appears on the balance sheet at its initial cost. On 31st December N, local authorities decide to close the highway exit near the land, and the market values of the land is now estimated at $150,000. Do you think there is an indication of impairment? There is indeed an external indication resulting from the closing of the highway exit, which causes a fall in values of the land. Its recoverable amount is in its market values of $150,000, which is also the values in use, since the land does not generate any cash flows other than what will be generated by its sales. In your opinion, what is the impact of this new situation on the year-end financial statement? You have 10 seconds. The value of the land decreases by $50,000 on the balance sheet due to the recording of an impairment loss, and expenses increase in the income statement by the same amount. How the impairment is reversible, it may change at a later date if the recoverable amount in a new impairment test exceeds $150,000.